Hi, Francine.
Hi, Dave.
What a week you have had, I think, haven't you? Well, we've all had.
I feel like what a month. We just keep on talking about banks. Zoe Schneeweiss, who used to be our bureau chief in Switzerland, said it best. The Swiss are boring until they're not.
Until they're really not, right? Now, front page news everywhere. And you have been zooming around, I know, covering this story. And we could have tried to get someone from Switzerland on this week, but actually, who do we get in the end is someone we've been trying to get on this podcast since we started last year, I think. And it's like the perfect moment to have, I think, Jim ONeill, don't you think?
Yeah, so when we started talking about the podcast about 8 months ago, you and I, Dave, were talking about, okay, who's the ideal economist who usually doesn't pull any punches, talks freely, and of course it was Jim ONeill, former Goldman Sachs economist, who coined the acronym BRIC.
Exactly, and he was right at the center of things in the big financial crisis of 2008. He's been a policy advisor, he's been in the government. Of course, he's a Manchester United deal expert. All these things are sort of converging at the moment. So finally, he said yes, that he'd come in and talk to us.
I'm Francine Lacqua.
And I'm David Merritt.
This is In the City, Bloomberg's podcast, connecting you to the conversations at the heart of the City of London.
And this week, we speak with former Conservative Minister and Goldman Sachs chief economist, Jim ONeill.
Jim ONeill, the world-famous economist.
Ooh.
Who coined BRIC, who's now the House of Lords.
Is that me?
Who, ex-Treasury Minister?
I was.
What else do you have on your CV?
I'm the chair of Northern Gritstone, which is actually probably the most fun thing I currently do, which is relatively new entity that invests in startups coming out of northern universities.
Do you miss being in banking?
No, not in the slightest.
Particularly now, right?
I mean, the sort of analytical bit about how the hell do we get out of this situation, I'd enjoy. In fact, one of the great things about my time in it is because there were so many of those events. I often say one of the sort of few things I think I learned is how individuals, I think it's probably true broader in life, but certainly in that world, how individuals responded during a crisis and how the leadership of an institution responded would be the mark of how they did in the next era, in my view. I think it's true as certainly of the best investors, but it's probably true of an organisation as well.
What do you mean, Jim? So if they accessed public money, then they're in a better shape now? Or
no, I mean it more in sort of culture and leadership and sort of thoughtfulness about how you respond. And I guess below it, what I really mean is, crises will always happen despite the best intentions of policymakers, because at the end of the day, I think they're a consequence of at one end greed and at the other end fear and whatever, and it's just human nature. But we all have these strange minds where we forget things. So nobody ever really thinks about that, although it's the reality. Then a crisis happens and most people kind of panic a bit. Typically people who haven't been through them before and frequently don't make rational decisions about, what's the right thing to do and what's going to happen.
So UBS have had to bring back, therefore,
yeah.
Sergio Ermotti, right?
Yeah, I just saw that when I was walking in, yeah.
So if the phone rang, somebody saying we need would you take up the mantle again?
No, I have too much fun doing things I do. It's actually 10 years ago in April that when I left Goldman, I promised myself that was it. I was leaving because it was a nice time to leave for me and nobody really expected me to leave. And I sort of dreamt up this mantra, if it can't be better, it's got to be different, about what I'd do. And I've kind of stuck to it, really.
But how would you fix banks right now? What's going on in the banking system right now?
I mean, to me, and I'm not in it 24/7 like I used to be, but from my 40,000 feet, I think it's revealed one thing again that we always know, is that whenever interest rates rise sharply, the weak get found out. It is quite simple and quite remarkable how that theme just does repeat. What's the great phrase? History never repeats itself, but it rhymes. I mean, in that instance, it is. I'm really reminded of my days at SBC before I went to Goldman, where in 94, the gang I was with, just the research guys, but also some of the prop traders there, we were very confident the Fed was going to start raising rates, and we thought we were such geniuses and blah, 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 blah. And we got completely hosed because of the broader things with the bank's exposure to Eurobonds, it was at the time. And it's just so difficult when that's happening. And that's at the core of this. And then, but secondly, it's just so difficult for the regulators to treat every financial entity with the right approach. I think what seems to, famous last words, what seems to be robust, which as a consequence of last time, is what they broadly put in place for big banks seems to be robust enough. But what they made a huge error on, and from what I vaguely read, I think the Silicon Valley Bank guys played a bit of a naughty game, is they deliberately kept their equity size below the number of where they become subject to full serious regulatory focus. And that was obviously an error of the regulators. So I'm assuming all of that will get changed. I think the Credit Suisse thing is slightly unique because obviously that is one of the 30 banks that was supposedly too big to fail and it had the correct regulatory net. And that bit, I don't know. I mean, another oddity about this, which is a contrast to 08, is that because short rates are so high on government debt in the US and the UK, you know, for any rational person that has a bit of cash that exposing a bank that they don't need, you can basically get the same rate of return in 2 year or less government money. So what is the incentive right now to do anything other than put it in a government? And that means that particularly for banks that aren't so strong in terms of deposit bases, quite a lot of them are probably under the cosh as we speak.
So are we going to see more in trouble, or is this now contained? I mean, we have seen this mega deal in Switzerland try to contain the bleeding of the system there, but and SVB obviously has been resolved. But the interest rate situation is what it is, right? So is there more to come?
You know, I think if you go back over the whole of my career, you know, I don't think there's a magic solution. Monetary policy can't solve everything. It's a blunt instrument in that sense. And what is the prime job of the central banks? We've lived it for much of our generation thinking it's to fight inflation. But every time there's a huge financial crisis, actually what their prime job is to ensure financial stability. And I think of what we've seen from them in the past 3 weeks, I think is actually pretty impressive in terms of the speed in which they reacted, which of course is driven by what happened in 08, and it's very impressive. And I think that tells you that in the event of some further big problems that especially start to threaten some of the big guys, you know, there'll be more hints of broader deposit support that Janet Yellen clearly flirted with, and then she backed off. But the interesting thing is, because of the tricky to measure but probably important mechanism from those weakened banks that then curtail their lending, this might start doing some of the Fed's job and the Bank of England's job and other central banks' job for them.
Right.
So it stops the need for other rate hikes.
Yeah, certainly if there's a credit crisis. When you look at our mobile apps, does it encourage bank runs? We had the Citigroup chief executive saying, like, look, maybe regulation needs to look at this. So you have a lot of online fakes. We had I don't know if you saw the Pope with the big puffer jacket. That was a fake. You had, there's so much fakes and there's so much mobile app. Like, is this a perfect concoction?
I think mobile phones have got a lot to answer for.
Right.
Frankly.
Board, right?
For banks?
More broadly. I'm still waiting for somebody to tell me why Facebook and Twitter will serve any useful purpose to society. And more, if you look at it from a true macroeconomics perspective, we've had this staggering, and I'm on the damn thing all day long as well, by the way, and we've had this staggering rise of this during a collapse of productivity in the Western world. And I think it's a quite relevant issue to focus on about the rise of AI, because what is the point of all these things if they don't boost productivity? Why are they useful things for society?
But
And
we're
if
beyond
these
that.
allow banks to have runs in false circumstances, then clearly it's not.
It also runs at a record speed,
of course.
right? I mean, in 2008, people had to queue around the block.
Yeah, you had to get your place in the queue.
Right.
Which,
and
of
now
course, in England would all do.
It was a day. Yeah, exactly, which we were very pleased to do. But and you mentioned the speed of the regulators, but if everyone can pull their cash out in hours, what can the regulators do to sort of catch that?
It adds to the problems facing them. I mean, it's, of course, always so easy for people to criticise regulators, but that's one of the core things as to why it's so hard for them, because, quite rightly, they've always got the moral hazard issue at the back of their minds. And if they certainly wouldn't have supported Silicon Bank as quickly as they did, that could have been a catastrophe for, normal human beings, never mind all of us closeted people who've been in the world of finance.
In Britain, there was some praise for the government about how they responded on the SVB situation. Over the weekend, they brokered the deal with HSBC, and everyone on Monday morning thought, look, Britain's regulators are working quite well. It's all quite neat. Is that something you...
Listen, I messaged people I know in the policy world myself saying exactly that. I thought, and this has not been... I'm a crossbencher, by the way, so I'm at liberty to... Neutrals. So I can criticise or compliment anybody on the political side. And this government or this colour of government has not been that difficult to criticise in the past few years. But on this, I thought it was very impressive policy. The speed in which they reacted was very impressive. And I think they kind of, HSBC, it was probably a very difficult thing to not do, given the price they got it for.
But is this the government, or is this Sam Woods at the Bank of England with Andrew Bailey? Is it the regulators?
I think it's almost definitely all of them, and I think it's a coincidental reflection of the character of this Prime Minister, and in that sense, I think we have a couple of adults in the room for the first time in a few years. They might not be the most exciting personalities to lead a country, and our Chancellor as well, but I think it's a reflection of how they are as thinkers, because they would, particularly Rishi, because he was in finance, so he'd know straight away better do something pretty sharpish. But I think the Bank of England guys played a big role too.
And as you said, Jim, it's been years, hasn't it, since it's been possible, or since I've heard people, in your position experience, for lavishing praise on the British government.
Doesn't come so easy these days.
Sort of through clenched teeth. So are you a bit more optimistic then for the reputation of Britain, or the City of London in general, with this administration?
I mean, it's such a subjective topic to talk about, and so easy for the kind of crazy decisions this country has made in recent years to think that, the city's in trouble. But as I'm sure, Fran, you and I have over the years talked about this, we have some really basic 40,000 feet unique advantages that are hard to get rid of. And because of the sheer history of financial markets, and therefore the depth of what might loosely be called the talent pool, and our regulatory system and our legal system, it's pretty hard for anybody else in this time zone to get even close to the role that London can play in global finance. But we're chipping away at the edges, that's for sure.
So what should the government do? And what if you had to give a report card to this government and regulators, what would it be?
Well, on a close tangent part of it, I am partly involved in aspects of this now, because I was asked by Rachel Reeves to lead this so-called startup review into the future of, small businesses and new startups becoming successful, because it's a huge seeming dilemma in this country that we have all these brilliant universities and lots of great ideas, but we fail to develop seemingly too many lasting successful businesses out of them in the UK. And so that was quite fun doing that. And I'm a big fan of those aspects of the so-called Edinburgh reforms, and they need to go further. It is bizarre how many assets our big pension fund and insurance companies hold, and how little they invest in domestic risk assets. And we made a number of proposals, which I think under a different government would be adopted. But as is the nature of parts of the odd way how politics seems to be conducted here, the incumbent government is also on the case about many of those same ideas now, whether it's because they've thought of them themselves or they're like, as they've done with other things, just pinch what the opposition is saying. But so I think there's quite a lot of momentum to use the freedoms away from being in the EU and to play around with Solvency II to allow, if not force, some more long-term domestic investment, whether it be in infrastructure or scale-ups or to empower the British business bank.
But that would be
more.
protectionism. Is that protectionism? If you force investment domestically?
Call it what you want. I mean, it's kind of what goes on in many parts of the world, and the US has always, from my experience, been so brilliant at this as, being the leader of free markets, but being pretty clever at subsidizing a lot of its technology businesses through homeland security, for example, or through the defense spending. I mean, would Google and others have actually ever been what they are if it wouldn't have been for support from the US government early on? And to be honest, Fran, I think it is necessary, because if you look, and again, I spend lots of time on this because of all the stuff I'm doing around the North, but more broadly, if you look at Britain's biggest problem, which is low productivity and with it, extremely persistently weak investment spending, we got to do something about boosting investment spending, both from the government itself, but also on the incentives for the private sector. It does entail, if you do that, and I'm sure some regulators now, because of the banking issue, will try to, it may raise fresh risk about the mark-to-market issues of how, because it's long-term investing in risk assets is risky. But no risk, no return.
How can you persuade the big pots of money to invest or take on more risk that sit in the City of London? I mean, there's Solvency II is one angle of this, of course, but how can we create more of an investment in risk culture in the city?
I spent endless time on this, and it's the core feature of the Startup Review, but because of proposed and because the psychology of businesses, Labour might win. So a lot of big business people, especially risk takers in this space, have been in touch with me, and so I'm spending a lot of time on this every week. And I think the real answer is, because of the culture we have and how long some of these things have been going wrong, it's probably not that easy. For the big institutional investment managers, particularly ones of a somewhat younger generation than me, they've been brought in a culture where dividend yields and gilts is all that they need to do. We've got to change the risk-reward culture around that. And it will involve some possible cost, because who the hell's going to buy all these gilts if they're not buying as many? But we need to change the way their incentives work. So one way linked to Solvency II, which I think is going to happen, is you change the rule in which they account for long-term liabilities to have it more sensitive to anything other than gilt yields. Because when you really...
So that's more the US model?
I think it's more like the US model, because when you certainly think back to it, and following the mad few weeks of Liz Truss, from my vantage point, that disaster ended up being as bad as it was, because we discovered that a large section of that crowd had basically for the best part of a decade been taking hugely leveraged bets on gilts. And is that the right thing for our long-term institutions to do? And I think the answer is no. We need people to be investing in things that will boost the country's long-term growth performance. And whether that, including, by the way, more of them holding publicly quoted equities listed in the UK, because that's partly why nobody ever lists in the UK anymore, because there's no domestic investors, and it becomes a bit of a vicious circle. In the days of when Maggie was first around and we began to privatise some of the endless state entities of the time, before your time, I might suggest.
Many decades before my time.
Only the beginning.
I may add.
Only the beginning of mine. It became known as Call Sid, where you would basically have a huge campaign aimed at anybody in the country about how good it was for the country for them to buy shares in BP or BT. Yes. So one thing you could do in that, you could on I don't know what the pension schemes are like here, but on many these days, you're asked to, do you want to invest in, do you want your pension to go into equity or dividend, or
Jim,
you can have two more? You say,
I know,
actually,
but these are all ideas. Will they push it through? I mean, Dave and I spend a lot of time in saying, look, there's also the cost of living crisis. The government wants to be reelected. Like, this could be low-hanging fruit, but will they actually get it done if they have so much else to worry about?
it seems to me that both mainstream political parties are working quite seriously on this stuff. And the real answer to the cyclical, intense challenges we've got is we need to be able to boost the growth rate in a non-inflationary way. But if you just put sticking plaster on solving the cost of living crisis in the way that it generally is trying to be done, all that means is when you try and boost the growth rate again, you're going to go straight back into it. So you've got to be able to boost the capacity of the country to grow without generating inflation. And again, it goes back to adults being in the room. If I look at some of the things they said in the budget, it's probably the most serious supply side boosting budget I've seen, certainly since the days of Osborne, and maybe a bit, sorry, George, maybe even a bit before. On things to do, again, that I'm heavily involved in, on devolution and giving more powers to English regions, certainly the most serious stuff we've seen since Osborne.
We might be just a year away from an election, and it sounds like you feel that the other side of the aisle and Rachel Reeves, they're not going to be radically different in their approach to this.
I mean, I think that's part of the intriguing thing here. If you did one of those games where you sort of dubbed Rachel's voice with somebody else's in the Tory side and otherwise with the current Chancellor, would you know the difference on a number of issues?
Well, Bloomberg we would.
Well, you would, of course you would, because you're so savvy. But I think in that sense, maybe we're coming a little bit back, like towards the early 90s. And maybe there's a hint of broader things. You can see it a bit in other countries that some of the sort of lunatic fringe people of the past decade don't seem to be quite in the middle of the game anymore. And so in that sense, I kind of quite welcome it. But I've got to know the opposition leaders pretty well, and I think they're quite credible people.
Have you bought United yet?
Oh, God, I knew you'd raise that topic.
And for how much?
Really what we want to ask.
What do you mean? I don't know what you're talking about.
Who's United?
Yeah.
Have you, though?
No. What I don't get about the core issue of that, so many people don't seem to understand that £1 billion is like an enormous amount of money. There's, never mind 4 or 5, so there is literally very, as this rather public, that's a fascinating part of it. I've never come across a publicly quoted company having such this game going on via, in this case, sports media, to effectively try and boost the value of the asset. There must be some pretty fine issues about whether the New York Stock Exchange should be having a look at that, because it's literally 3 months of this madness. But what it's revealed, that there's only 2 entities, from what I can see, that, how do I put it, seem to think it is possible for them to afford to buy this thing, because it's a huge amount of money that they seem to be asking for.
Can a football club ever be worth that much, £5 billion?
I mean, I think early on when I was maybe last on with France, she annoyingly dragged some of this out of me then.
We'll just play the tape on that. Right,
I don't think that the next 20 years for the commercialization of football is going to be anything like the last 20. So anybody that's spending that kind of money on the basis that they're going to get a return on it probably needs to go and visit their GP.
Unless the Super League is back.
That wouldn't do it. But
that's not enough.
That would help, but I think unless the Super League idea is proposed in a very different way, and in particular to have relegation and promotion, there's no way, famous last words, there's no way that the fans, and for that reason the regulators, would allow them to do it in the foreseeable future.
But is this all because of Chelsea?
I think the United is unique. Again, going back to my deep, deep obsession with it and my own history as somebody that used to travel around the world as much as I did. As soon as I breathe Manchester, unless it was Japan where the cab drivers can't speak English or seem to pretend they can't. Everywhere else, literally Manchester United. Anywhere, it is a staggering brand. So United is quite unique, but adjusted, it's not impossible that the Chelsea guys put in peak football price because they paid a crazy price for it. And look at the mess that's going on there. According to my info, there wasn't a single buyer trying to get hold of Liverpool because it's a huge amount of money. And so you're really talking at somebody that has some sort of philanthropic type purpose. But even, what person is going to devote billions of pounds to that unless it's part of some broader strategy they've got? Hence why there's only 2. Although the sellers seem to keep trying to create the idea that there's another 6 that nobody just knows about yet, which, come on.
Who do you think it'll go to? I always get you in trouble.
I don't know. I mean, I don't know. What I really hope, and they both know this because I chat with them, I hope if the owners actually sell it, I hope the new owners treat it as the brand that it is, but have a real purpose and bring a connection back to where it's from and actually link it into Manchester's development and Manchester's role in the Northern Powerhouse, etc., etc., etc. Because if they don't, whoever buys it, they will find out a few months later that they might not be the most popular guys in the planet either. Although, of course, the fans right now are desperate for it to be anybody other than the current guys.
Jim ONeill, thank you so much.
My pleasure.
Thank you. Thanks for listening to this week's In the City. We'll be back next week.
If you like our show, please head on over to Apple Podcasts or wherever you listen to podcasts and rate, review, and subscribe.
Yes, it helps people find our show, so please take a second and leave a rating.
This episode was hosted by me, Francine Lacqua.
And me, David Merritt.
It was produced by Summer Sadi.
Additional editing was by Blake Maples.
Special thanks to Jim ONeill.